Well, good morning and welcome. You are at the start of another fresh day and a fresh week of trade. I am Harsh Saita and with me is Snehi Shah. We'll take you through the next 1 hour and we'll take you through all that's happened in markets over the weekend as well as late on Friday, especially on the global front. Let's kick that straight off. Snehi, good morning.
Absolutely.
Talk to us about how global markets are doing.
Happy Monday to you, if it ever is one. Happy Monday to all our viewers. Let me quickly take you through what the global markets look like. Let's start with the US markets, and stock futures were flat on Sunday evening as Wall Street looked to see if the market rally could find more momentum in the final week of June. Now, futures tied to the Dow Jones Industrial Average ticked up 55 points or less than 0.2%, and S&P 500 futures and Nasdaq 100 futures were also higher by roughly the same percent. Last week ended a winning streak for all three major averages. Now the Dow fell 1.6%, breaking a 3-week winning streak. The S&P 500 fell a little bit more than a percent, ending a 5-week winning streak. And the Nasdaq Composite fell 1.4%, snapping an 8-week winning streak. It was the worst week for all three indices since March, but all three indices still closed above the 200-day and 50-day moving averages. So that's a slight bit of a positive coming there. Shifting focus to Europe then, and European stock markets closed lower on after 4 sessions of declines. The Stock 600 index closed 0.3% lower, with most sectors in the negative territory, and oil and gas stocks took the biggest losses and they fell 2.2% as oil prices traded lower, and mining stocks dropped 1.7%. Healthcare and telecom stocks led modest gains, each closing 0.7% higher respectively. Now Siemens Energy, which is the spin-off of the German conglomerate, plunged 37% after ditching its profit outlook for the year because of issues in its wind turbine division. So slight bit of a negative coming there from the European markets. But this is what the global handover looked like. Harsh, take us through what crude looked like over the weekend.
Well, yes, absolutely. And, crude doesn't look much different. You're still seeing crude pretty subdued in trade. And, we saw the Bank of England hike rates, larger hike than expected, 50 basis points late last week. We will have the Fed meet as well this week. And really, that's putting a lid on crude oil prices. What we're therefore seeing is that WTI is at just below $70 a barrel, and we're seeing Brent sub $75 a barrel, even though I can see a wee bit of a recovery in early trade today. So that's a bit of a positive, for crude markets. But nonetheless, we're seeing crude absolutely in a tough spot. We're seeing oil, in fact, up around 0.75% in early trade today. But other than that, we've seen a tough week for crude last week, and it doesn't look to be getting any better this week either, with the Fed meet coming through as well.
Okay, so all eyes will be on those levels this entire week. But with the last week of June coming in and a whole week of trading left ahead of us, let's quickly see all the important cues that you should be keeping on your radar this entire week. And on the global front, let's start with US then. And on 28th June, the Fed Chair Powell will speak. So important numbers, important speech, important commentary coming in. Keep your eyes out on that one. 29th of June, you've got US GDP numbers as well as initial jobless claims, important data. Moving on to China then, on the 30th of this month, you've got the manufacturing PMI, non-manufacturing PMI numbers coming in. And on the annual general meeting front, shifting focus to the Wall Street then, on the 26th of June, you've got HUL, 27th you've got SBI, and 27th as well, you've got Asian Paints. 28th of June, you've got Infosys, and 29th of June, you've got TCS. Big companies, all large caps, so keep your eye out on this one as well. IPO action. 26th of June, the IPO will open for Idea Forge Technology. 27th for Cyan DLM, so keep an eye out on all these IPOs as well. And on the corporate action front, on the 26th of June, the Z-Sony mergers, the SAT hearing will be happening today. 27th June, HAL board meet will be happening, and the board will be mulling a stock split. And on the 28th of June, the BPCL will mull fundraising via rights issue. 27th June, you will also have Bajaj Triumph launching, so keep an eye out on all these cues to watch out for.
Well, yes, absolutely. We'll keep an eye out on all of that. Also, it's monthly expiry on the 29th. So a lot of things to keep our hands on this week. Definitely, Snehi. Let's quickly move on though. On to the global news front, you have U.S. Secretary of State Antony Blinken. He said that an attempted armed mutiny in Russia shows real cracks in President Vladimir Putin's authority. He adds that the rebellion by the Wagner fighters was a direct challenge to Putin, forcing him into an amnesty agreement. Wagner took control of the southern city of Rostov, Bricosin abruptly announced the armed rebellion was over, and as part of the deal, all criminal charges against the Wagner leader were dropped.
Staying with Russia then, and China has backed Russia and said that it supports Russia in protecting national stability. These were the first remarks from Beijing on the short-lived armed uprising in Russia. The Chinese Foreign Affairs Ministry, however, also reiterated that the issue was Russia's internal affair. The comments came after China's Foreign Minister Qin Gang met with Russia's Deputy Foreign Minister Andrei Rudenko in Beijing.
Well, I'm switching over to the U.S. The White House on Sunday confirmed U.S. President Biden had spoken with Zelensky, saying the two leaders discussed recent events in Russia as well as Ukraine's ongoing counteroffensive. Ukrainian leader Volodymyr Zelensky and U.S. President Biden on Sunday discussed a brief revolt of mercenary troops in Russia that sparked Moscow's largest political crisis in decades. I spoke with the US President Joseph Biden, a positive and inspiring conversation, Zelensky tweeted. We discussed the cause of hostilities and the processes taking place in Russia, he said, adding the two had also discussed long-range weapons.
And from geopolitics to the weather then, but staying with China, capital city Beijing and parts of northern China continue to feel under record temperatures. The Chinese Weather Department has urged people to stay indoors, and temperatures soared to as much as 40 degrees Celsius for the third straight day, according to the Chinese Met Department. Red alerts have also been issued for select areas.
Right, and switching over to Europe, meanwhile, Greece's new Democratic Party has inked a landslide victory and won the parliamentary elections. Mitsotakis hailed the strong mandate after the landslide victory. Official results from nearly 90% of voting centers nationwide on Sunday showed Mitsotakis' party with just over 40% of the vote. The left-wing rival suffered a crushing defeat with just under 18%, much worse than the 20% in the last elections in May.
Okay, shifting focus to North Korea then, and North Korea held mass rallies in Pyongyang where slogans like War of Revenge were heard to destroy the United States. Marking the 73rd anniversary of the outbreak of the Korean War, hundreds and thousands of working people and students took part in the rallies held across the capital. Sunday's anniversary came amid concerns Pyongyang could soon conduct another launch of its first military spy satellite to boost monitoring of U.S. military activities after its first attempt ended in failure on the 31st of May.
Right, and on to the domestic front, PM Modi concluded his historic two-day state visit in Egypt yesterday and was received by BJP President JP Nadda and other BJP MPs from the airport. His visit to Egypt, PM Modi visited the iconic Al-Hakim Mosque in Cairo, where he spent time speaking with local dignitaries. He then visited the Heliopolis War Memorial, where he paid his respects to the fallen Indian soldiers who laid down their lives during the First World War. Meanwhile, the Egyptian President and PM Modi signed two key strategic MOUs, and Prime Minister Modi was also conferred with Egypt's highest state honor, the Order of the Nile.
And it's a Mega ET Now exclusive. On the latest edition of CEO at Work, we got exclusive access to ITC's massive factory at Kapurthala in Punjab to catch up with CMD Sanjeev Puri on the next leg of growth for the tobacco giant. Here's a sneak peek of that conversation.
Our non-cigarette revenues are about 2/3, and non-cigarette EBITDA is also now 28%. It is becoming significant. And all these are growing faster than the rate at which the overall company grows. And today 80% of our capital employed is actually in the non-cigarette sector. So that's where the investment is. So from our perspective, it's about providing industry leading performance in each one of the segments. That is the objective. It is about leadership in every segment, not merely because of size, also on account of product or the services. We want leadership. So where we are already leaders, the idea is, can we progress further Where we are not leaders, we need to become leaders. In some of the newer businesses, some categories, we may not be leaders. The idea is to become leaders there. So that's the way we look at it. But because the opportunity and our investments are lying towards the newer segments, naturally over time, I think they will grow faster. They will occupy a bigger salience in our whole kitty.
Right, extremely interesting conversation there with Sanjeev Puri, was our managing editor, Nikunj Dalmia. But with that, let's take a very short break. More on the other side. Right, welcome back. You're watching Market Cafe. My apologies. You're watching Market Cafe on ET now. Let's quickly take you through what Asian markets are up to in early trade. You're seeing that the U.S. futures are trending slightly in the green, so that's a positive. You're seeing around 0.25% or thereabouts of an uptake. So on the Nasdaq as well as across the board, you're seeing the Dow futures up around 0.1% as well. Asian markets are following what US markets have done through last week as well as on Friday. So you're seeing a wee bit of negative on the Asian markets. You're seeing the Shanghai, which is down around 0.5% or thereabouts, as you can see on your screens. Quickly moving on to the Hang Seng as well, slightly in positive. In fact, the Hang Seng around 0.4% in the green. You're seeing the ASX 200 looking at a slightly lower start, 0.25% lower. Seeing the Nikkei as well as the Kospi. The Nikkei first, we're seeing it up around 0.1%, marginally in the green, positive bias coming in, and the Kospi up around 0.5% as well. So seeing mixed on some of these Asian indices, slightly lower on the Shanghai and the ASX to start off. Our own SGX Nifty indicating an absolutely flat start, flat as you like it, but a positive bias nonetheless. So hoping for what will hopefully be a week where the Nifty exceeds its past highs. Snehi.
Good morning and thank you for staying tuned to Market Cafe. This is ET Now. Now let's move on with a story then. And Hindujas may soon get RBI's final approval for increasing stake in IndusInd Bank. ET Now has learned from sources that Hindujas may invest 10,000 crore rupees to increase its stake from 15% to 26% in IndusInd Bank. Ankur Mishra has more details on this. Ankur?
Yes, sources say that Hindujas are likely to get final approval from Reserve Bank of India for increasing stake in IndusInd Bank from current 15% to 26%. What we have gathered through sources is that the process of complying with the norms of Reserve Bank of India was on, and in that Reserve Bank of India had already given in principle approval to the bank for increasing the stake to promoters. And in that process, there is a form called R1 which was applied by the lender, and all the formalities which are needed for applying for increasing the stake are completed, and we have been told that now regulator may give the final approval for increasing the stake very soon. We understand that the promoters are likely to infuse around rupees 10,000 crore capital for the same, and it is likely to be done by IndusInd International and other companies. Now, as far as the process completion is concerned, we understand the whole process takes 60 to 90 days, and since the application was already made 2 to 3 months back, the final approval may happen soon. And as far as the timeline for transaction is concerned, we understand that in Q2 of current financial year, this transaction may take place subject to approval from Reserve Bank of India.
Right, thank you so much for that, Ankur. Let's quickly move on. Now that the Sensex has scaled life highs, let's wait for the Nifty to inch closer. But how quickly can the Sensex get to 1 lakh? When will it hit that mark? Market veterans Atul Suri, Vijay Kedia and Sameer Arora share their views. Listen in.
I haven't done the maths, but why not? Really, why not? It's just basic compounding. It's going to get there, yeah. You know, having been in the market for 30 years, I saw the Sensex at around 1,000. So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason.
Because I don't invest in any Nifty stock or any Sensex stocks and all. So when I talk about Sensex, that means I'm In fact, I'm talking indirectly, I'm talking about my portfolio. So whether index doubles from here or not, that is a different issue. But I expect that this mid caps where I am investing, not I am, in the general mid cap category, good stocks should double or triple in next 2-3 years time. And so far index is concerned, I think that index is a counting of 21 is happening index, 21,000, 42,000, 63,000. And I think that next stop should be 84,000 in 2 years from now. And of course, 100,000 is just a destination, I think, and miles to go for index.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 in 66,000, does it become 1 lakh or no? So plus minus, it would be there. Because broadly speaking, if I look at it over any reasonably longer period, the returns have been in this range. So, it doesn't need too much of rocket science. That's why I tweet saying you want 2 lakhs, you just extend the number of years. Because broadly speaking, this number doesn't come only from the fact that historically this has been the range over last, I saw it over 3 or 4 periods, which is 5-7 years. And then I think I did 14 odd years and then some 20 years and then my own my career, which is about 26-27 years, and broadly over every period it is in this range. But this range is not just coming by looking at historical numbers, but by the fact that Indian GDP in rupee terms grows about 11-12%, and then you can add 1 or 2 more percent for the fact that corporate sector might be doing better than the rest of the economy, or you might be doing it from an equity risk premium point of view, that equity returns are normally 5 to 6% more than the fixed income 10-year type return of the same country's government bond. These are all worldwide things. And also broadly, we feel that for a large part of the corporate sector, the earnings growth for normal, once they become a little, this thing is in the range of 12, 13, 10, 15%. And then some companies grow at 20, 30% for some periods of time. So from all angles, it looks that is the thing. So you just multiply and see, but I would think it would reach somewhere there.
All right, let's move on then. And Srinivas Rao Ravuri, who's the ED and Chief Investment Officer of International Business at PGIM India Asset Management, expresses concerns for the demand in IT sector. But he is positive on financials. Let's listen in.
I think IT is at an interesting space right now. These companies are great. They generate a very high cash flow, ROE, governance levels are fantastic. But I don't think all the negatives are priced in the sense, if you see the net hiring by IT companies in the last 2-3 quarters, it is almost negative, which in turn means what? They are also turned cautious and, people are input for IT companies. And this is a clear sign that they also see a slowdown. So overall, we still see concerns in the IT sector on demand outlook. Within that, there are pockets where we may see reasonable growth, but I think companies that are dependent more on, let's say, BFSI, banking financials, will definitely see more slowdown. So to that extent, I think one can increase exposure to IT, but still one should be underweight in the sector for a few more months is what I believe.
Right. We'll quickly move on. Indian carriers continue to place more and more orders for aircraft. Indian Airlines, including Indigo and Air India, have over 1,000 planes on order. As airlines order new planes for expansion, they also have to constantly train pilots on the new planes that come up with updated features. The pilots are not trained on the real planes, but on simulators, of course. ET Now's Sumit Chaturvedi got an exclusive access to one such simulator operated by India's largest airline, Indigo, at a facility just outside the capital, New Delhi.
Here we are at one of such facilities, and you can see 3 simulators of planes here. One is Boeing and 2 Airbus. Pilots come, they get trained. We rarely get a chance to see these simulators. In the aviation world, these are very important, where the pilots come, they get trained, and if they have to go on an upper level to go further in the training schedule, they come and get trained here. So it's important for all the airlines, they train their pilots at different point of time, because the aircraft also change. So these pilots are brought in, they're trained here, and some of are given very advanced training. Also, it happens on all these simulators that are made in many parts of the world, but here they have been brought in the Interglobe facility in Greater Noida in India. And here we can see these simulators are currently working. There are pilots inside that are getting trained on these simulators. In a way, they get a feel of the entire aircraft, and pilots don't need to fly an aircraft to get trained. It just happens entirely on these simulators. Pilots are definitely on their toes all the time because they have to see what is happening inside an aircraft, how the technologies are getting updated, and all this happens inside these simulators. The pilots get to train themselves. Here, there we can see 3 of them in which pilots are getting trained.
All right, thanks Sumit for those details. But with that, let's quickly slip into a short break. Don't go anywhere. On the other side, we see as all the stocks that you should be keeping on your radar in today's trading session.
Right, welcome back. You're watching Market Cafe on ET Now. Let's quickly take it to Lisa, who's standing with us, or rather sitting with us in the studio. Lisa, talk to us about all the stocks that are in news today.
Well, good morning to all. So starting with the stocks that will be in focus today with the Coal India, the Coal Ministry has approved the wage revision for non-executive employees. And what the chairman is saying that the new wage agreement for non-executives employees that will result in pay conflict with the executives. Moving on to Shree Cement on IT raids, the Income Tax Department is conducting a survey at their premises, but the management said that they are extending full cooperation for the same. And Z NCLT hearing will be today. Z CEO Puneet Goenka, he'll be appealing in the proposed Z Sony merger case. HDFC Life Insurance, they have received 940 crore notice for the non-payment of GST, and the insurance company, they will be appealing against such charges, and they expect the impact to be less than 1% of the enterprise value. Pharma companies also will be in focus. Couple of news from Zydus Life Science. The arm has acquired 6.5% stake in MyLab for 106 crore, and this is promoted by Adar Poonawalla. Moving on to Ipca Labs, the US FDA has issued Form 483 with 8 observations for their Pithampur formulation manufacturing facility, and also Aurobindo Pharma has received a withdrawal of application for the EU marketing authorization. So pharma stocks will be in focus. And lastly, ICICI Bank board will be meeting on June 29th, and this is to discuss the proposal for delisting of the equity shares of ICICI Securities. So these stocks will be on investors' radar for today.
All right, Lisa, thanks for those details. So keep an eye out on all these stocks today, but shifting focus to chemical sector then, and global players are hinting at a tough FY24 for Indian chemical companies. So Lisa, what are the key triggers, and take us through all of this that's happening in the chemical space?
Yeah, you're right, Snehi. So what had happened is that the Indian chemical companies, they had pointed out at a weak Q1 FY24E, and that was on the back destocking issues and also supply related issues. But the global players, they have issued a warning saying that it's going to be a tough FY24 for the players. So this goes in line even for the Indian chemical players. Lancex had highlighted that the demand recovery is expected in H2 FY23, but that is not visible yet. Even Croda had expected that the customer destocking will continue into second half of 2023 as well, and also the momentum for crop protection, that is not picking up. So as per Equidus, they are saying that the Indian chemical companies, they will revise their guidance downwards post their Q1 FY24 earnings, and also the destocking is likely to take another 2-3 quarters. Demand recovery is also expected to be pushed for towards the end of FY24. So in this whole year, there won't be any recovery for chemical companies, and it will be under pressure. Navin Fluorine, PI and SRF, according to Equidus, they are expected to significantly outperform the industry given their differentiated portfolio, and PI Industries remain their top picks for Equidus. So that's on the chemical sector, and it will be in focus today.
Right, thanks a ton for that, Lisa. Let's quickly shift focus on to action from the primary markets. Though the Idea Forge IPO opens up for subscription today, my colleague Sharad joins in with all the details on this one. Sharad.
Well, yes, Idea 4's IPO opening is there of the issue, and the price band is set at 638 to 672 rupees per share. The post-market implied market cap is expected to come in at roughly 2,800 crore rupees. Now, looking at the IPO size itself, it's coming roughly 567 crore rupees, out of which you can say that the fresh issue of shares is roughly 240 odd crore rupees. They have raised roughly 255 crore rupees from anchor investors and big names such as Goldman Sachs, Tata AIG, General Life Insurance, as well as Nomura. Their names are being seen. Now, the company itself is having 50% market share in the Indian unmanned aircraft systems. The company develops drone systems, and overall, look at the product portfolio, it has three key segments: hardware, software, as well as the embedded solutions. Now, Infosys is having roughly 4.35% stake in the company, and if you look at the defense segment, roughly 70% of the revenue comes from there, and the order book currently stands at roughly 185 crore rupees. Looking at the financial, there has been a stark improvement, and the company has come from the profitability over the last two financial years. Apart from this, looking at the valuations where the company is standing, we have taken a 12-month calculated forward basis for P, and Idea 4 stands at roughly 28 times as compared to its peers such as Tech, Data Patterns, and Astra Microwave. And that's coming on the lower side of the valuations. But lastly, I would like to point out what are the important triggers for the drone industry. And overall, the Indian drone market is expected to go with an 80% CAGR from FY22 to FY27, going up from $43 million to the market size of roughly $810 million. And lastly, over the last week or so, DGFT has liberalized the policy when it comes to the export of drones, or UAV, which is the unmanned aerial vehicles.
All right, thanks Sharad for all those details. Keep an eye out on this new IPO, but let's also go across and listen into what the management of IdeaForge had to say.
Thanks. So, IdeaForge is a company that's been building drones in India since 2007. We've been incorporated, but we actually started building drones even earlier in 2004 when we were still students at IdeaForge, at IIT Bombay. We were essentially wanting to build an hovercraft, and that's how the journey began. We wanted to make a hovercraft. One of my co-founders wanted to do that and float it in the lake right next to our campus, which is the Powai Lake. And that's how the journey for wanting to build an aerial platform started for us. And in the journey of wanting to build an innovative helicopter is when we came up with the quad rotor configuration, the 4-rotor configuration that you see in most weddings now. And we developed our first prototype in 2004, and since 2004 to 2008 we were developing the technology in the background, but we were not yet building a product from that technology. But in 2008 we got the opportunity to make these autopilots, which is the brains of the drone, and deliver it to various labs in our country for enabling drone programs for those labs. And that autopilot that we had built at that time was the smallest and lightest autopilot at that time globally. So that's how we started developing the technology. And in 2008, when the attacks on Mumbai happened, and we had the helicopters trying to look into the 3rd and 4th floor of the Taj Hotel, is when we felt like we can create a technology using our drones that can help in such situations.
So we are looking at productizing our current portfolio to next levels, and we are also looking to venture into different markets internationally as well as we are venturing into a different size and shape of drones. Today we cater to about 50 kilometers set of market range, the kilometers endurance range, and we would be venturing into tactical and middle mile range of products going ahead.
Right, we'll shift focus very quickly. Let's look at some management meets and analyst days. Dabur and Apollo Tyres both are in focus today. On the back of those, Vinny is here with all of the highlights on that one.
Good morning. And in terms of Apollo Tyres, let's talk about what the management said over there with an analyst meet. They've highlighted that in terms of a revenue growth, the India revenue growth, they see that likely that is to taper off to mid to high single digit in FY24. They see a further moderation in OEM and replacement segment as well, and lower exports is coming in. So maybe some bit of a pressure that they're expecting to see coming in this first half as well. Europe revenue, that has remained flat in FY24 so far. Raw material costs is expected to see flat to higher QOQ growth for Q1 FY24. And on a steady state basis, India EBITDA margins, that's likely to be at 14 to 15%, and Europe is expected to be at 16 to 17%. That's the word coming in from the manager. The management is targeting a return on capital employed improvement of from 10% in FY23 to 12 to 15% by FY26. FY24, the capex plan is of around 1,100 crores, and the management is saying that the AP plant, that's Andhra Pradesh plant, is to facilitate cost control measures as well as improvement in quality and better productivity. Maybe some subduedness in terms of demand is what the management has highlighted. Dabur, on the other hand, we're seeing a sequential recovery in rural growth. That's what the management highlighted. And especially they're seeing normalization in terms of sales coming in for the second half of FY24. High food inflation, especially in rural belt, is holding the HPC demand to come back. But rural is improving sequentially. That's the word is what we're understanding. Unseasonal rains, that has cut the demand for juices. Healthcare, that showed a moderate momentum in terms of growth. Currency headwinds are impacting the international business for Dabur. That's the word coming in from the management. And EBITDA margin has now bottomed out. They're starting to expect a 250 basis point improvement by the end of FY24. The new CEO is to drive 20% growth in Badshah Masala, and that's the word coming in from the Dabur management.
All right, thanks Vinny for all those details. Keep an eye out on all those names. And moving on then, let's go across to Ansh, who's standing by with details of all the companies that the brokerages are keeping on their radar this morning. Ansh, good morning.
Good morning. So starting with Eicher Motors, CLSA has maintained a buy rating with a target price of 4266. According to them, share of 250cc motorcycle segment is going up in the premium motorcycle segment. However, making money at RE price point is quite difficult. Apart from this, Asian Paints will also be in focus. Macquarie has maintained outperforming rating and also hiked the target price from 3,700 to 3,800. According to them, focus of the company is on distribution expansion and capital on capacity additions. Lastly, Tata Consumer will be in focus as Citi has initiated a buy rating with a target price of 1020. Citi believes that company is gaining traction across segments and financial performance is also expected to improve.
So much for that, Ansh. Also, we had a very interesting note coming in from Nomura on SBI Cards. They've cut the target price for SBI Cards from 1,030 to 700 rupees a share. So a sharp target price cut. What we're also seeing is what they're suggesting is credit card industry growth is moderating, as well as SBI Cards losing market share as well. So SBI Cards will also be in focus on the back of that. Mind you, you're already seeing that SBI Cards is, or was facing some amount of pressure in trade on Friday as well. So very interesting to keep your eye out on SBI Cards as well. But let's quickly move on. ET now had a power pack lineup of corporate honchos, and we've kind of compiled in what they have had to say about their company's future roadmap. Let's have a quick look and listen in.
Nigeria is our single largest overseas market. Subsidies which are going for fuel, those have been removed. Again, this has caused an increase in petroleum product prices.
Yes, there will always be pressures on margins, but we have to eke efficiencies out of our existing business and our book to be able to fund some of that. If the tax change had not happened, the margins would have gone up. If you take a slightly longer term view over the next year or so, once this year is out of the way, the upward trajectory on margins will continue to happen.
It's a very good demand for credit in the SME segment also. We do see a good opportunity to grow our business. And definitely, we will be able to maintain that 15% guidance which we are given on the AEM. But what we would like to focus is to grow the bottom line much better than the top line.
All right, the top word coming in from the big India honchos. But with that, we're all out of time on this edition of Market Cafe. But don't go anywhere. The market takes all the action ahead.